Hey, welcome back, everybody. Good to be here. Good to be back. It's Ed Ponsi, your FX educator, here on behalf of FX Street. Here we go. I've been away for a few weeks, so we have a lot of catching up to do. So I hope everyone's been well, and I hope everyone's ready. So the most interesting thing that's happening right now that happened over the weekend is the collapse of the coalition in Germany. Um, Angela Merkel's election uh, and fourth term really is dependent upon this coalition of three parties. And it collapsed over the weekend. And when that happened, the euro took quite a dive. So we'll get into that. Just taking a look at some economic statistics first. We had producer prices in Germany, as expected, both month over month and year over year. So nothing really exciting there. Exports in Japan slightly down, less than expected, and imports also slightly less than expected. So a little bit of disappointment there. Got a speech from Mario Draghi in 56 minutes from now. This is something that cannot be ignored, right? Mr. Draghi will be giving his wisdom to the markets in less than 1 hour. So keep this in mind. Um, you know, if you're planning on opening up a euro trade right now, you might want to say, hey, I think I'm going to wait, maybe wait an hour and see where the dust settles, or not. I mean, that's up to you. It's not up to me. But just be aware that there could be a huge move in the euro, or maybe a not so huge move. It's what we call event risk. There's an event happening at the top of the hour, and there is risk that if you're in the euro prior to that event, that a big move could move against you or in your favor. And we've had some pretty big moves, even over the past 24 hours, but some pretty big moves in the euro in general recently. Um, so Draghi's speech here, if I click, what's he going to talk about? Don't know. Not really getting any extra special information on this, so we'll just let that go for now, and just be aware that that speech is on the way. Later on, actually, apparently he'll be giving another speech later. I can't imagine that later speech will be any different. And then you've got some bond auctions in the U.S. I don't think that's going to be any big deal. If you're trading Aussie, you're going to get meeting minutes this evening. That's something you might want to be aware of. Okay, that's it. Now let's take a look at the euro charts. That's where all the fun is. And wow, lots happened since I last saw you. We had this really cool bearish channel. You can see that I drew it in here. And we had set up a trade and we had hit that target at 115.60. You can see that nice wick coming down and just hitting it there. And that happens on November 7th, right? Today is November 20th, right? So that happened a while ago. And since then, euro moved up, shot up nicely, right, on the 14th. Big move, right? And really shot higher. But now watch what happened over the last 24 hours, though. I'm going to go to the 5-minute. And you can see how the market reacts to the news that Merkel's coalition falls apart. There it is, right? The market opens Monday morning in Europe, Sunday evening here in the U.S., and you can see the news hits, and wow, the euro does not take it well, right? Dumping from 118 almost down to 117 and kind of bumping around there But then this morning at the European Open, it gets it all back. So really kind of an interesting situation there. I'm going to pop this out to the 60-minute just for reference purposes to see where it fell. And it looks like there was a little bit of support in this area right here. And you can see here, I'll put a little support line for you. You can see where it stops falling. There's your support right about here. And look where the price bounces from that support. All right, so a little bit of flatlining here was the support. And you can see the support right there. So the price did find itself right there. Interesting how that happens, right? So now we're in an interesting spot. Like, what happens next? It's kind of hard to say, right? Germany's kind of has failed to form this government, and that could mean the end of Merkel, right? And so that could be it. That could be it. So really not sure how this is going to play out, and so. The euro hates that uncertainty, so the euro dove on that, but then it gains it all back. And what you can see here, this looks to be a flag on the 60-minute. So we'll put that in, and new parallel. Now you can see the flagpole and the flag, right? And I would say that flag probably begins about here, 117.35 up to about 118. It's about a 65 pip flag. So then you would measure from here, from about 117.75, the bottom part of the flag. Tack on another 65 pips to there. This becomes your target. So 75, and now add the length of the flagpole. This is the length of the flagpole, which we said was 65. Add that to this portion, which starts at about 75. So 75 plus 65 gives you 118.40. So your target is actually here. This becomes your target. For the flagpole, for the bull flag trade. So we'll see if that works out. Now, naturally, if the price dribbles out of the bottom of that flagpole, you just dump the trade, take a small loss. There's never a reason to take a big loss. And that's the one thing I hope that we make really clear here, is that there simply is never an acceptable reason to take a big loss. But it looks like this momentum's going to continue. So the knee-jerk reaction was sort of panic, sell the euro. But look at the prevailing trend prior to last night. Right, here's last night's dump. But look at the prevailing trend prior to that. There was a little bit of a delay for a few days. But the prevailing trend was higher. We had broken out of that bearish channel, which is these two purple lines. We had already broken out of there. And I think it's bullish at this point. Think about this also, that those people who sold short last night, all right, how did that work out for them? Right? If you sold short, you got burned. Right? You get burned. It comes back up. It comes against you. 17. Not 16. Um, if you sold short during this little red stretch here, which must have been very exciting, but if you sold short in there, you got burned. And if you get burned, you are unlikely to go back in and subject yourself to that again. That's the takeaway here. So I think what happens is you've just taken some shorts out of the game. Some of the shorts have just been taken out of the game because who wants to keep throwing themselves into a position that loses, right? How many of you get burned on a trade and want to dive right back into it? It's not that appealing. Okay. So let's see just how many shorts are out there. Now, we do this by looking at, we're going to take a look, excuse me, at the COT report. Now, this is a futures report. Why am I not looking this up? You might see that it says futures only. Why am I not looking this up in the spot Forex market? Well, this information does not exist in the spot Forex market. You know, nobody keeps track of the spot Forex market. It's too big. It's huge. We have the biggest market in the world, 4 trillion, 5 trillion a day. Those are just estimates because nobody can actually count it all. It's too big. Tell me how many drops of water are in the ocean. You go count it. I'm not going to count it. You go count it, right? It's who's going to count it all. Futures are great, says Zohab. Yeah, you know, I mean, futures have advantages and disadvantages. Like, I'll give you an example. Futures trade on an exchange. Okay, that's an advantage, right? Why is Forex not on an exchange? How could you put it on an exchange? It's too big. You know, it's huge. There's no exchange where you could fit it all. There's no exchange where it could exist. It just evolved into this massive beast, you know. Futures have volume. Because everything goes on an exchange in futures, it can be time-stamped. So you can read volume. But a disadvantage would be this. Because Forex futures are a derivative of the real thing, and we trade the real thing, make no mistake about it, right? We're trading the spot market. So because futures are a derivative of spot, they're not going to have as much volume as we have. Okay, we have volume at every price point. Let's take a look and see. Now, one of the advantages also is of because futures trade on an exchange, the exchange can force the traders to keep track and report their positions. And that's what we're looking at right now. The large non-commercial traders, 200,000 long and 115,000 short. What do you think of that? 200,000 long contracts and 115,000 short contracts. That means the market is more long than short. Now, believe it or not, this does not help our trade. I'd prefer to see more short. Why? Because every long is a future seller and every short is a future buyer when it appears in this area. Why? Because these are traders. These are large traders. So I would, you know, if I'm a buyer, I want to see most of the market on the other side of the trade because I know that at some point they're going to get out of the trade. Does that make sense? I hope it does. right? All right. So I look for these imbalances between long and short. The best ones are when long or short outweighs the other by like 3 to 1, 4 to 1 or more. So let's see if we can find any. For example, what is the British pound up to these days? The British pound is almost perfectly balanced. 53,000 long, 57,000 short, means there is no advantage. And so I move on to the yen. And here is the big advantage that I'm looking for. The market is massively short the Japanese yen. 49,000 contracts long, 185,000 contracts short. It is nearly 4 to 1. And to get a feel for how big these traders are, the 185,000 contracts are held by just 49 traders. The 49,000 long contracts are held by just 25 traders. Fascinating, isn't it? So if there are a massive number of shorts on the yen, and the yen suddenly gets strong, then these shorts are going to start losing money. And if they start losing money, that's a very painful situation. If the shorts begin to lose, it means pain. Pain is a strong motivator. Pain is a strong motivator. And that means those shorts will begin to cover. And when shorts cover, they buy. So there's a lot of pent-up buying pressure waiting to be unleashed in the yen. That doesn't mean I'm just automatically going to run out and buy the yen. But what I have to figure out is where on the chart will those folks feel pressure? If they're short the yen, that means they're long dollar yen. Okay, they are long dollar yen. By the way, here's a trade setup that went very well. I don't know if anybody took this, but I left this as a gift, I suppose, before I went away. And it looks like all the targets have been hit as of just yesterday, right? As of the 17th, rather as of Friday, all targets were hit. So this is exactly the type of thing that may have been created, this huge candle, may have been created by those very shorts covering. Remember, if they're short the yen, that means they're long this currency pair. But as this currency pair goes down, they are losing money and they go, oh boy, we got to cover. And that means even more selling of this currency pair. And we say, thank you. Thank you for pushing it down. Right? We appreciate that. And let's get to your question. What is your view on ES and NQ? Those are futures contracts, but we'll look at anything if it has a chart. But if you remember this setup, it was really basically, it was a big double top. 1, 2, and we said when the double top breaks, we're willing to sell short. Let's go to ES. Look at that train of bullishness. It's been going on for years. I keep telling people, if you think that crash of 2008 hurt, what's going to happen if we fall from here? Better be prepared. Think about it before it happens, not after. So futures look like they're flat to the close. I gotta say, eventually this will fall, of course, because nothing goes up forever, but at this point, there's nothing really bearish about this chart right now. You don't want to fight the trend. The trend still seems pretty bullish to me. I'm going to see if I can apply any moving averages to this. That's the 10 exponential. I'll try the 20. We usually apply these to currency pairs. You can see, look, the 20 was money for a long time here. Bounce, 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 bounce. Finally breaks last week and then fights its way back. Just kind of hanging on that 20 right now. But the 20 has been money on the ES. That's the S&P 500 E-mini futures. Right? S&P futures. And a fantastic chart there, an interesting chart. Let's take a look at the NQ. Can we pull that? Yes, we can. And the 20 is money on the NQ. Lately, look at that. Nice bounce here. But it hasn't really been money, has it? It was much better on the S&P. Look at that. Broke through here. So you really can't say it's been money. But it has been much better on the S&P than it has been on the NASDAQ recently. All right. Sohab says, I was long Japanese yen last week and made very good. Yeah, that was our setup also. We were also long yen. On the futures, it's funny, right? So if you look at dollar yen, I'm going to get rid of, just for people who aren't aware, when it comes to Forex, right? In the spot market, a currency pair can end in USD, like Euro USD, or it can begin in USD, like dollar yen. However, when we look at the futures market, you never see USD. USD is implied, and USD is always the second member of the pair. So for example, at EC, that is the euro. This is the same chart as Euro USD. Well, I'll change it to Euro USD on 1, 2, 3, and it's basically the same chart, except I have lines drawn on one of them. Back to Euro, EC, right? Same chart. That's because Euro USD ends in USD, but dollar yen is going to be the inverse. USD JPY. Look at the shape, kind of drink it in. Now, but when I put in at JY, it's going to look the exact opposite. Ready? At JY. See that? And the price is also inverted. This is yen dollar, not dollar yen. This is yen dollar. In the futures market, dollar is always the second member of the pair, and we don't even say dollar. It's just understood. These are just yen futures. Technically, it's yen-dollar futures, but dollar is understood. Now, what if I want to trade euro-yen? Let's say I want to go long euro and short yen. In the futures market, that's a little more complicated. You see, in Forex, spot Forex, I can just short euro-yen currency pair or go long euro-yen currency pair. If I want to trade euro-yen in futures, I literally have to enter a long position. Let's say I want to go long euro-yen. Go long euro and go short yen. So really you're going long euro USD and you're going short Japanese yen USD. Cross out the US dollar and you're long euro yen. That's why they're called crosses in the world of Forex. Because, but the unfortunate thing, the disadvantage on futures is you have to actually enter 2 transactions to enter that trade and 2 transactions to exit that trade, right? Which is not good, right? So advantage spot Forex there. So there are advantages and disadvantages all around. You know, there is no interest. There are no interest payments in futures, but you can't collect interest. Is that an advantage or a disadvantage? I guess it depends which side of the trade you are on. But consider this. You don't get a free ride on interest. See, people think they're getting away with something, but they're not. The interest is factored into the price of the futures. So when you look at Euro USD, right, and look at the price, like the current price of Euro USD, it's about 117.75. Then I go to the futures contract. The price is about 117.87. You're thinking, well, why is there a difference in price? The difference in price comes from that interest. The interest doesn't just disappear. It gets factored into the price in futures, right? More fees, says Carlos. Well, in a sense, yeah, it just gets factored into the price. So, and as far as the brokers are concerned, yeah, definitely more fees. One thing about the spot Forex brokers is they don't charge you a data fee or a platform fee and all this stuff. You know, they keep it pretty easy going with the fees. Whereas some of these futures and stock brokerage places, if you want to have direct access, my gosh, they want a fee so you can see the price. They want a fee, you know, for this, that, and everything. You know, well, we'll waive the fee if you place a zillion trades. But if you're placing a zillion trades, that's another type of fee. It's almost like paying a different type of fee. So really, there's no free ride. Okay, so just some of the differences between spot and futures. There's definitely some major differences, right, to consider. Okay, gang. So just to review, we started off with a little setup on the 60-minute on Euro USD, little flag. And if that drifts too much, we just cut it off. Right, and that's where we started. And we also talked about Merkel and her collapsing coalition in Germany. We talked a little bit about dollar yen and the imbalance between shorts and longs on the COT report. And we talked about the difference between Forex and futures. It's a lot packed into a half hour. And we have another half-hour session coming up in just 30 minutes, so stay tuned. This is Ed Ponsi for FX Street. I'll talk to you very soon.